So this is available on the Moodle site. It's a practice sales and purchases transactions. So you can just download this form, and if you want to do it again, and then watch the video to see if your answers are correct or not. But you're going to have the answers. But if you know someone that's not here today, you can tell them that this has been recorded, and they can watch it, and it may be a benefit to them for next week. So first one's done for you. It's an example of how to fill out this form. First of all, it says, Jane C. invested cash in her new business. If she invested cash in her new business, what is debited? Cash. And what is credited? Jane C. Capital. Remember, when you're doing this, you're putting account names, so they need to be complete. So whenever you know the owner's name, that must precede either the word capital or, if it's appropriate, withdrawals. So look at number 2. Bought supplies on account from ABC Company. What will we debit here? You're buying supplies, so we're going to increase the asset supplies. And what would be credited? Okay. First of all, accounts payable, correct? And then ABC Company. Make sense? Let's move it on up. Number 3, you bought merchandise for resale on account from Jones Incorporated. What do I debit? Good. Purchases. And what do I credit? On account. Account payable and good. Jones Incorporated. You must put both. Whenever you have accounts payable now, you're going to have to put who you owe. Now, number 4, bought equipment for cash. This is a review one. Good. Bought equipment gets debited, and the credit goes to cash to pay for it. Number 5, sold merchandise on account to XYZ Company. There is sales tax in this state. Okay, what's the debit first? Good. Accounts receivable and XYZ Company. In the credit, you are correct, goes to sales and to sales tax payable. We're incurring a debt because we're going to have to pay the state for the sales tax. Okay, let's move this up. Number 6, again we're selling. Sold merchandise for cash. There is sales tax. If we sold merchandise for cash, we're receiving cash. What does that tell you we debit? Okay, and the credits go to? Sales, good. Good. And sales tax payable. Excellent. Number 7, customer returned merchandise for credit. Sales tax was involved. Customer returned merchandise for credit. Sales tax involved. And is that a debit? It is. Sales return and allowance, because it's a contra sales, therefore it has a debit balance. Any other debits? Good. You need to give them credit for the sales tax liability. And what about the credit? Good. Accounts receivable and, yeah, whatever the name is. We don't know it here, so we're not going to put, we're just going to put name because it's got to be somebody. Now, number 8 is also review. Paid salaries. And cash. And this one. Just did this one a little bit ago. Paid insurance for the coming year. Good. Increasing the asset, prepaid insurance, and credit cash. Do you like that those are so easy now? And number 10, return merchandise to a vendor because of poor quality and received credit. Is that a debit? Good, thank you. It is going to be accounts payable because you're reducing the liability and the vendor. And if purchases is a debit balance account, purchases R&A has to be a credit. All right, let's turn it over. There's more. All right. 11. Recorded adjusting entry for supplies used during the month. And again, this is an adjusting entry. Supplies used. Excellent. Supplies expense. And the credit goes to reducing the asset supplies to update it to the current inventory. Good. Number 12, Jane C. withdrew cash for personal use. Yeah. Not capital. Good. Jane C. withdrawal and cash, reducing cash for the amount that she took out. 13, purchase store equipment on account from Smith Company. Good. Increasing the asset, store equipment, accounts payable, and great. Smith Company is the credit. Paid to the State Department of Revenue the sales taxes collected from customers during the month. Good. Reducing that liability, sales tax payable. And if we're paying them, what's the credit? Cash. Doing great. 15. Purchase merchandise, paid cash. Yes. Purchases and cash. Simple as that. $16. Jane C. invested more cash in her business. Good. Cash is going up because of the cash investment. And Jane C. capital is also going up, therefore a credit to that account. Bought supplies on account from ACE Incorporated. Why not purchases? Because it's supplies, not merchandise intended for resale. And the credit goes to Accounts payable, Ace Incorporated. And 18, bought merchandise for resale on account from Jones Incorporated. Purchases, once again, is the debit, and accounts payable, Jones Incorporated. Sold merchandise for cash, no sales tax. Sold merchandise for cash. Is the debit sales? Thank you. Cash is the debit because we're receiving cash. And sales is the credit because revenue are credits. And the last one, careful, sold used office equipment to store next door for cash. Receiving cash, therefore cash is going up, debited. And the good. Office equipment is going down because we've sold it. An asset has been reduced. You know, good question. Anything to do with the depreciation? That would be handled later, but for right now, all we're going to do is record the sale of it.